Is my mic on? Is it on? I think so. Let me double check. I need, hang on. Hang on, Bubba. I like the way you trade. All right, I think I got the chat on. Hey, good morning. Comment allez-vous? Let me move this to there. Let me move that to there. Let me get this over here. And life's so complicated. All right, so it is 8:06 in the a.m. on a Monday. That means it's time to get our Forex on. Welcome to the YouTube community called Forex.Today. There's also people watching on Twitch and on Facebook, maybe. Anyways, welcome to the community of 17,000 plus, more than 17,000 foreign exchange traders. Today we'll cover technical analysis, fundamental analysis, maybe throw in some trader psychology. Who knows? Because you're the one that controls and dictates the content. If you enjoy these videos, if I say something reasonably intelligent or helpful today, or maybe just kind of make you laugh, make sure you subscribe, like, comment, thumbs up, all that kind of stuff. So without further ado, let's get on with it. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm a currency trader just like you. I've been doing this for a couple of decades now, or pretty close to it. I'm still in love with what we do. So we're going to talk everything technical and fundamental. I'll do my best to answer your questions. Take notes. Write them down, put them in the comment section below the recording so that you can search them in the back office of your YouTube account. That's sort of the tip of the day. Today I suggest we go through the calendar because it is Monday, and then we'll do some technical analysis. What currency pairs would you like me to review? Please pop something in the chat. What's on your mind? Euro, dollar, yen, gold, Bitcoin? What's going on, son? Let me know. Speak up. Be heard. Squeaky wheel gets the grease. I'd like to thank you for being part of this community. It's important to me. I hope it's important to you. You contribute a lot of energy, a lot of effort, a lot of good karma, positive energy, and that has an amazing impact on my life, so I hope it does in yours as well. So thank you for being part of the community. I'd also like to thank Traders Way for being a broker that is trustworthy and is interested in your success, in your education, your confidence, and maybe your happiness. I'm not sure about that. But anyways, why not? Throw that in there too. So they say, hey, Wayne, can you help clients become better traders so that they can survive and then thrive and maybe even turn this into a career? And I'm like, yeah. So that's why I'm here. So thank you very much, Traders Way, for the fast execution speed, low spreads, big swaps, and for being so pretty. So pretty. All right, here we go. Let's see. We got gold, czar, beast, czar. Really? And an odd. Okay, we got some Aussie. Okay. A catalyst for profit taking. That's always a good thing. You're like, oh man, what am I going to do? I got too much profit. Kitty Cad-yen. Okay, we'll go through some of those. Let's do the calendar first, and then we'll come back to the text. Okay, a lot going on today. this week. Okay. BOJ meeting minutes. By the way, we're starting Davos, but it's virtual, so does it matter? I don't know. I mean, you go for the parties, right? Let's skip through some of these things. CPI. See, we're not really worried about inflation, although we want to see upticks in inflation, but it's not really a concern. So I wouldn't put these things high like they normally are on a calendar. I don't think that's where we are in our economic measurements, or let's say concerns for the global economy. We're not concerned about inflation. In fact, most economies are trying to create it. Okay? So, but we want to see a upward movement on inflation, right? So anyway, so we're kind of looking at those. I don't know if they're a big deal. I think we got other things, but I think if you look at it aggregate, okay, put Aussie with Kiwi, with dollar, with yen, all that kind of stuff. We want to see upward movement, but I wouldn't call that high. Then we move out onto Wednesday, durable goods. Interesting if you're doing calculations on GDP. FOMC press conference, Fed monetary policy statement, and an interest rate decision. Cool. Well, we know this ain't going up, but we're interested in what they say here in the statement. Okay, so we're looking for forward guidance. So that's going to be super unbelievably important. Put that down. Wednesday's not a day off. Thursday. Jobless claims, great. Oh, GDP, very nice. Okay, GDP, very nice. So we'll take a look at what happened in the past. We'll take a look and see what happened in the past and see if it's relevant for tomorrow. So anyways, we'll pop that out and we'll take a look. Obviously going to be important. Okay. Again, maybe not that important newsworthy-wise, volatility-wise, but as far as anchoring or confirming or reaffirming your fundamental bias, that's got to be the, your sets your base case, if you will. And then Friday, European unemployment, okay. German unemployment, German GDP, obviously good, okay. Then we have a US PCE, and that's much more important than CPI. It's a slightly different basket, managed slightly different way, and it's sort of the more modern version, if you will, of CPI. And PCE is what the Fed uses for their benchmark on inflation. So that will come out on Friday. Okay. And I'd say that's pretty much it. Right? I feel like I'm missing things that are not on this calendar, but they're slipping my mind. So, and then I'm looking forward a little bit to next week. Okay, look at next week. RBA interest rate decisions, European GDP. Okay, ADP, NFP. So there's some RBA stuff again. So you might want to start playing Aussie this week. Whoa, what? It's Monday. So you might want to start playing Aussie this week based on what will happen next week. So you should be thinking 10 days ahead at this point. There's one sort of wink, wink, nudge, nudge that I'd send your way. All right? Nice, right? So that's the calendar. It's an interesting calendar. We have enough news on the calendar to sort of grease the skids. The market's going to move the way that it wants to move. I don't think anything's going to get in its way. So let's take a look at where we are in the moment. We got to go to the indices, and then we'll do your requests. I'm happy to do that. Cool. Dollar weak. Nice. Yen weak. Nice. Okay. Smells like a false rally to me. Okay. Pound sideways. Kiwi up. Euro up. Aussie down, CAD down. What a weird mixed bag, right? So what we're looking at is we got this, right? So that you would look at this and say everything else should be up. You see the problem? Well, that ain't up, so that's not risk on. That ain't up, so that's not risk on. This is just a question mark at all, always. So you're like, and Euro and Kiwi, okay, they're not really that related. So you kind of got this mixed bag. Well, yeah. So I don't see the conviction there. I don't see it. Remember, we're working on your long-term game plan. So I want you to see these little things on the short term and say, okay, if the market's not doing what you want it to do long term, there's certainly no reason to freak out. Okay? That's one kind of interpretation. Excuse me. But there is some risk on mode, so get your risk on. Okay, we got a lot of requests for gold. Let's move over to commodities and do gold and oil. Okay? So a lot of these things should be fairly simple in the sense that you've already made a decision way back in December or even sooner what you think is going to happen for the entire year of 2021. Raise your hand if you've done that. You already have an opinion on what's going to happen all year long for gold. Huh? Yeah? Because now then it's pretty easy to start setting things up. Morning, Maida. Right? So what's gold going to do? Oh, that's pretty easy. So let's start here, just kind of look at a confluence. Okay? And what do you see? Well, you think it's going to go to $2,000 an ounce. Okay? Easy, not complicated, but also at least $2,000 an ounce in the year 2021. Does it have to be now? No. Okay? So how do you look at it? Well, this is a decent base. Okay? And then you take that on top of what we're doing now, higher high, higher low. So you bought it in London, right? Okay. Right? Or you got a better price by doing a Friday front run. It's just swing trading, nothing complicated, pretty straightforward, right? Okay. To review, you knew that this is your buy zone. In fact, you could even buy it way down here, okay? But I'm adding the month into it, so I'm defining it slightly more, So there's your Friday front run, okay? And there's your London Open. Okay? You're stepping up. These are all steps. The cool thing about it is, since you've made a decision, you don't miss these things. Okay? So that's very nice. If you weren't sure and you were trying to look at your charts to make decisions, then you missed it. Great coffee. So yeah, gold. How about, so we're already looking for the top of February. I know, right? So my mind is definitely on February. I'm very interested in the next 6 to 8 weeks for setups. So every setup could be the setup. Okay? Just a quick review. If R1 is your top, what is the predicted bottom for the market? If R1 is the current top of the market, what is the predicted bottom based on that information? What is the predicted bottom? So this is R1, this is S1. Oops, I can get that a little nicer. So that's pretty nice too, right? But if you're going to now play this as upward, even though we have an inside month, inside meaning this is a top, this is a bottom, the top is higher than this, the bottom is higher than that. So, okay, so that's an inside month. But since you're a bull, remember the bullishness has nothing to do with gold. It has to do with things like consumption. Okay, it has things to do with weakness in the dollar, for example. Okay, great. So based on your assumptions, yes, we're on an inside month. It makes sense to you. You're okay with that. And under current market conditions, meaning low, higher low, that you're going to climb this up in February. Now, that's what you believe. That's what you're going to do. You don't know if it's going to happen, right? Newer traders always think that, more experienced traders know what's going to happen. They don't know what's going to happen, but they know what they want to happen. They know how to set it up. They know how to take it. And then if it fails, they know how to take the stop. And you're either stopped out for a profit or you're stopped out for a loss. It's either a big profit or a little loss. There's no such thing as a small profit. Okay, so you just that's what there you go. I just planned out the entire week, next week, and all of next month. That's how you do it. Okay, so now you have to say, well, what are you going to do today? Well, that should be easy, right? Okay, that should be easy. Okay. What is this? What is this green area? What is the green area? Yeah, the bullish buy zone. Well, I just set this up for you. There's the Friday front run. Here's the combination of weekly and monthly buy zones. And then you're telling me what? That this, based on math, is where a bull would buy, inside of where a bull would buy, inside of where a bull would buy. And this is where I'm saying where if you're gold, well, you bought it London Open, right? No. Oh. And you're like, well, I wasn't sure if it was going to go down. Okay. All right, cool. So another common request was euro dollar. Guess we got to do that. Let's move over to pivots dollar. And we'll look at this. Okay. Okay, so what happened here? Okay, here's the turn, here's the breach, here's the pullback, right? There's the lower low. I'm simply saying at the lower high roll reversal, there would be a new short, so you should have shorted there because it's all predicted here. And of course, the assumption on taking that short would be a new lower low, and we haven't got it. What piece of information do we have here that may explain why euro dollar suddenly went up last week? Not the week before or the week before or the week before. What what could explain why euro dollar suddenly went up the third week of January? Yeah, even above beyond. I just sort of gave you a hint. Besides that, seasonal false rally. Oh my gosh. No, it's just the false rally. I told you in April that this would likely happen. Strange. It's stupid, I know. Then you're going to say, well, Wayne, predict further. Tell me, is it going to go here? Is it going to go here? Is it going to here? I don't know. Just like be ready for this. That's all. Yeah, fake news, yeah. Right? So it's just sort of, so do I think that's the big up? That's it? That's the bottom for 2021 and it's all up from here? Everything's solved? Everything's ready to go? No, I do not believe that. Never did. So the continuation here would be something like this or a variant of that. And I've been doing this long enough where I've seen all three. Jimmy, I just did gold for the month, for the week, and for the day. So Jimmy, you need to hit subscribe and then put that little bell. You got to click that bell thing so you get the alerts when I hit go. Okay. The second one, yeah, I'm all right with that. I'm okay with that. Because what we're trying to do, of course, is front run February. Oh, snap. Shut the back door. Yeah, it's true. Thank you, Maida. Can someone provide Adamo a link to the FX Bootcamp free training courses? Does anybody have that? You know what? I'll just do it. Hang on. YouTube.com/FX Bootcamp. Playlist. Beep, 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 beep. Ciao.
Hello. Welcome to the presentation.
Why does it put it out of order?
As the markets. The markets
There we go.
down, so I'm looking for reasons.
Here you go.
Well,
Got it.
remember that. Well, how about things like
That'll answer all those questions.
Pass the test. Advice from them. But create trade plan, guide to strategic do lag.
It's in there somewhere.
Action, which is what's happening in the moment. So
Okay. Wow. What a great presentation. I miss it. Those are good days, I'm telling you. Those were good days. I look back at those days and I have fond memories. So there you go, Adamo. All right. So yeah. Okay. So what I'd like to see is up and down, and then further out. Let's play on this. Okay, we're gonna go a little more advanced. Okay, we're gonna go a little more advanced. So bear with me. Okay, newer traders are interested in what's going to happen today. I mean, dude, we planned that last week. So, I mean, seriously, on Thursday of last week, we planned out what we'd be doing today and tomorrow. So, like, what's happening now is, it's like, Almost the wrong questions, right? So what I'm looking at now is where are we going to be in the next 6 to 8 weeks? This is what's going through my mind. And yeah, I'm kind of paying attention to some of these levels. You know, you got to mark them, and then kind of pay attention to the probability of what's going to happen. I would like to have some down so I can have some up. Okay. 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 You see what I mean? I want it to come down 1 or 2 waves more. I don't know what you'd call this. Is this a 1, 2, 3, 4? So there should be a 5th wave down to a 20, maybe, I think, if you're doing Elliott wave. I don't really know. Another way of kind of measuring it is take this top to the bottom and plan it out. Let me get rid of that, because that was to show you the breach, so you could be selling way up here on the monthly. Okay, so we got a 382, good. You know, I'd almost prefer a 618, so a breach of 20, clear out all those stops, get all the amateurs going the wrong way, and then take it off the bottom here. That would be great. I'd almost like, I like to think of like, I'd almost like to expect the worst way for it to happen, not the best way, so that I'm prepared. The worst way, of course, would be, right, you get something like this, and you start doubting your counter trend, and then you get this, and the whole month of February happens backwards. We top out high early, and then it drops, and we end up at the bottom of February low, not high. So February opens like a lamb and like a lion, or would it be the other way? Anyways, it opens up hawkish and ends up dovish. And we have sort of a long bottoming period. I mean, how about like sideways from the end of February? Let's call that March. How about sideways from March to July? Nobody's talking about that. And then, of course, I'd be buying it all up, cornering the market. Cool. So anyways, yeah, so I hope it's not all the way up and then down. So maybe up to 22.5, down to 19, and then we start tiptoeing in. Maybe, right? So anyways, so think further out and have some contingency plans and know what track you're on when you're day trading. Right now, dollar is weak and Kiwi is strong. So you better recognize and measure that up to try to figure out where we're going. Let's take a look at our indicators here. Let's open this up from day trading to swing trading. Okay, and you can see, right, this is really nice. If support is the bottom, it predicts resistance as the top. So we just did that on a different pair. Well, here's the bottom, so it's the opposite of think of what euro dollar did. S is the bottom, which predicts R as the top. So we, right? You see that? There's the top. There's the bottom. Very nice. So if you are either a bull on Kiwi or a bear on dollar, this is your buy zone for the week, and you're already Oscar Mike. Okay. The bottom currently is central pivot, so you're going for 73, not 72.67. Okay? Which then effectively just puts you back at the top. You want to check this on the monthly as well, just to double check to see where you are and where you're going, where you've been. Okay, so our top M2 bottom, change of direction. So I mark it like this. That's how I would do it if I were me. So if you can catch this, I would pretend this doesn't exist. As far as, like, I wouldn't take profit there. I would try to play this like we're front running February, because again, this is monthly. So this is your buy zone. Of course, you're a week early. So what you would want to do is play it like you got it and then go for the target. And of course, if you get it right and the market moves favorably for you, guess what happens? You're going to be out of position the first week of February. You're going to top out early for profit taking, and then you would expect a counter trend. And that would look like this. Okay, you top out, you'd probably hit 74 in the first week or second week, probably more like the first week of February, and then we bring it back down. So your planning would look like this now on a daily basis. Had to squeeze that in there. What's up, Mahai? Cool. So that's euro dollar, Kiwi dollar, gold. What do you guys want me to do next? We didn't do oil. We didn't do Bitcoin. We didn't do any yen pairs. What's on your mind? How can I help you? Gold, oil, Bitcoin, yen pairs, Swissy pairs. What do you want me to isolate? Aussie? Okay, exotics? Yeah, let's do some exotics. That's fine. I'm good with that. Rand. I had this open earlier because I'm planning this out as well. And I don't want to be too early and I don't want to be too aggressive. So I'm kind of looking at this for where we are. So we're right now a standard deviation from a mean. We can get rid of this maybe. And instead we can do insert indicators, custom, price action pivot points, and we can hit it that way. And we'll see currently this is still bearish, 2 standard deviations from a mean. Then what I do is I look right. See, amateurs look left. Looking left is okay, but I'm also planning the future based on the future, right? It's not all about the past. Some of the future requires using information from the future. So, okay. So I'm kind of looking at these as well. Shouldn't be a problem. Like this lower one I would remove because I'm a bull, or sorry, I'm a bear. So that wouldn't be, how do we get delete, right? There we go. So I'm sort of interested in this area, so I'm trapping it. I don't know if you can see that. So maybe I can manipulate this slightly and get rid of some of the data. Okay, so now I'm looking at it like that. Okay, so it doesn't quite fit, but that's okay because that's most of these charts I can show you are not fitting, which is fine, which means you have to wait and let it fit. So, you know, what it shows you is some up and then some down. And don't call that a head and shoulders. Just don't do it. But what we need to identify is if you are a bear on this, where would you roll it over? How high will it go? And my technical analysis tells me it's going to stay below 15.5. Okay. It can go down now, but I don't think so. It's too early. I think it's too early for that. But we're okay there, right? We're okay. So one of the things you can use as your gauge for risk is the bond market. How do you guys use the bond or treasury market to determine risk on or risk off? 10-year? Okay, yeah, but what are you looking at? So when I made a declaration that I am a bear on the US dollar for the next 5 years, interest rates were 0.5%, the yield on the 10-year. It had gone from 0.42 up to 0.5 and beyond. And that's it. I'm done. It was actually a little before that because it had to do with Powell, but the consequence of that, of what Powell said. Okay, interest rates started to move upward. Okay, cool. So about 2 weeks ago, I think we were close to 1.2. Yeah, we were at 0.43. Then we were at 1.2, and I think we're probably 1.07, 1.08 in the last few weeks. So that's why you see things like Rand suddenly, okay. See, during this period, rates were going up. And now suddenly, over the last just little bit, right, the other way. Let's see if we can get some data here. Is this daily? Oh, dang it, son of a... Hang on. There we go. Okay. We can look at it like this. 122. So it's not quite... Let's see. We were less than 1, broke 1, 1.04, 0.8, 1.13, 1.15, right? 1.5, 1.10, 1.5, 1.11, right? Okay. And today, I believe it's back below to 1.8. It just hasn't been reported. 10-year yield. That's not going to be it. What am I doing? Market watch. Yeah, 1.64. Huh, there you go. Look at that. Okay. Okay, it was up and then down. Let's see, maybe a week, 5 days. Okay. So you can see, okay. Okay. So anyways, that means this. It means up for this thing, for this asset. Okay. So I'm going to let that play itself out. People need to make their decisions. Remember, people is smart. People is slow as molasses on a cold Georgia morning. So anyways, they got to figure things out. People still don't know. They don't get it. The people are still making decisions. Things are still happening. There's still some unknowns. There's still this and still that. So, yeah, so just pay attention. Are you guys watching things like interest rates? Are you watching the yield on a 10-year T-note almost on a daily basis? Maybe a couple of times a week you check to see which way it's going? Think about what's happening. Somebody says, wow, I can lend the U.S. government money and they'll pay me 1.15%. That's a good deal. Okay? And when they're making that decision, they're saying it's not a good deal to invest into Tesla or Apple or the S&P 500. So they're like, you know what? I'm pretty happy with that guaranteed 1.15%. It's better than I've had all year. So they locked that in. So obviously they're fearful. They're not convinced 100% that the NASDAQ's going to be up 30% in 2021. They have other concerns, whatever those concerns are. They think a second wave of COVID or something is going to shut everything down, and all of a sudden, interest rates go back, or the yield on the 10-year goes back to 0.5%, because we end up going right back to where we were a year ago. So suddenly you're like, dude, I'm locked in well over 1%. You're going to be golden. And by the way, what that means, if you inverse everything, if you're buying at 1.15 and then yields start falling from 1.15 to 1.1 to, right? Sorry. To 1.0 to suddenly 1 to 0.9, 0.8, 0.7. What is actually happening to create that is that people are actually buying the bonds. They're buying the bonds. They're buying the bonds. They're buying bonds, right? You liking the sauce? They're buying the bonds, right? So they're buying bonds, which means bond prices are going up as yields are falling, which is interesting because if we get hit by COVID 2.0 and someone buys in at 1.15, they feel like they're going to earn a good chunk of income, right? But here's the interesting thing. If they're right, the bond that they own, is actually going up in value. So that 3, 4, 5 months from now, if they're right and the U.S. gets locked down again, like the UK, for example, then their bond will be worth more money. They'll be able to sell it for a higher price. And people will be falling all over each other to buy that from them. Okay? So, it's a gauge of how people are thinking. Right? So pay attention to where the money is going and use that for timing. And you're like, timing of what? Your long-term fundamental bias. Are you a bear on the US dollar for all of 2021? Yes. Well, money is flying into US treasuries right now. The treasury market is rallying and interest rates are falling. Oh, well, the dollar would be strong. Okay, well, you're a bear. So be cautious. That's all. Pay attention. Maybe not today. How about tomorrow? Yeah, maybe tomorrow will be better. Maybe you got to wait till non-farm payrolls. Get through that. Maybe you have to wait through Biden's first 100 days. But then you still have 265 days to make money. It's okay. You got time. You don't have to be on a 5-minute chart. Okay? Cool. So there's your Rand. And I Rand. Peso, it's too early. Remember the repatriation remittance trade isn't until next week. So if you're using that logic, you don't care if this goes up because you're a bear, and you know without even looking at this chart. Without even looking at the chart, you know you're too early. Okay? You're too early. What? Yeah, you don't even need to look at this chart. You're too early. Okay? How interesting. 30, 31. It's not. There it is. It's not updating. There it is. Okay. It's way to the right. Almost 2 weeks early to be selling this. You could try, just don't be frustrated if it doesn't work out. That's how I always look at it. So like, you know you're early, that it's probably going to fall more like here. But do you ignore where you are now? Well, if you can get your price. So let's use this as an example. You hit this and you get an opportunity to sell, let's say on Wednesday or Thursday. Do you sell? Yeah. Yeah, you can, for sure. You're front running February. You're front running everything. Next week, next month, you're front running everything. And basically what you're saying is, because you're fundamentally bearish, we are going to maintain a price below this ceiling. So you've made the determination. Based on your analysis, this pair will not go any higher than that. So you start putting together trade plans. And if you get your op in here and you take it and it does this, is that a game changer for you? No. Because you believe this is going to happen or this is going to happen. You're not going, oh, but what if, what, but it could, no, you don't think that way, right? What's up, Mikhailovich? Okay. 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 Right now, what this looks like is this. But I still think it's too early. But what I'm saying is take the shot anyways, manage the risk. It doesn't matter. Stoked for the new week, huh? Yes, I did like 6 minutes ago. Okay, I want to look at some yens because we know yen is weak, and someone said Cad-yen, so let's do Cad-yen. because it's another gauge of macroeconomic activity and global money flow. Correct? Correct. Of course it's correct. All right, so the first thing is you start way out here and see where we've been, where we're going. That's November, that's December, this is January. Still quite bullish. Okay. Okay, so it looks like the one standard deviation is probably out here somewhere. It's not quite straight, but you know, I think you get the idea. So actually, let me adjust it slightly so it's maybe a little better. Okay, we'll call that one standard deviation. We'll call that two standard deviations. So right now, we have massive neutrality with slightly bullish lean. Michael, I don't think anyone could trade Rand. Or I mean, Lira. I don't think anyone can trade it anymore. I don't think anyone considers it a legitimate currency. Yeah. There's no counterparty. Nobody wants it. It's garbage. Yeah. Their government ruined it. And quite knowingly so ruined it. Yeah. All right. Okay. So I look at this and the slope, okay, y equals mx plus b, okay. When looking at this, you can see the m is positive, okay. M is greater than 0, okay. So that's fine. That maintains your bullishness. But we're not one standard deviation below the mean. We're not one standard deviation above the mean. We're not anywhere. We're essentially at the mean. We're neutral. So I would temper my enthusiasm because I want to buy low. I want to buy the market when it's mispriced. I want to buy when there's an inefficiency. People get scared and it comes down here and I'm like, idiots. And I buy it low. Okay? I look at this and we're at a fair market value and I'm not interested in that. You see the difference in attitude? I'm not looking for a trade. I just want to make money. And I want to make money. I make the best money when other market participants are screwing up. Okay? Okay? So, for example, the way I look at this is somebody traded this beautifully. Somebody did. Somebody did. They bought at this price. That's the exact price, without a shadow of a doubt. If you wanted to buy this, that would be the best expected price for a bull. You know, uptrend, that is absolutely the best. You cannot expect even a penny less, a fraction of a penny. Okay? And then they added another one at exactly the price you would expect them to. And I don't see anything else. Now, yes, somebody's having hesitation up here. And for good reason. That's why we call that R. That's the resistant pivot. So you're like, oh, okay, well, that makes sense. There's a lack of conviction for trend, but not for bias. Okay? So my big question is, which one do I buy? And when do I buy it? And well, let's do it this way. Okay, at some point, you would expect something like that. Okay, that would be one standard deviation. Okay, let me do a different green now. Is this the different green? And this would be, okay. And what I'm trying to do here is bring this forward into the future and try to connect two standard deviations. The first one is one standard deviation, so we kick off that. That's good. The second one would be way down here, which means we'd have to revisit 80, which means we'd have to go through a risk-off period. And I'm perfectly okay with that. Okay? Okay? Neat, right? So one is just a kickoff of a one standard deviation. The other one is two standard deviations. But everything, to me, is logical and makes sense. It has to do the difference between trend, right, and bias. Now, Stevie says, yeah, waiting for the, yeah, but you don't have to wait. Some people would say, well, right, they might say they know the buyers are down here somewhere, so they could sell it into that. Okay? So now they're taking this and they're looking at that and they're putting together a short-term plan. Okay? The interesting thing is I can't tell who's in control here. Okay? This is the best bullish price. This is the best bearish price. And this is all mediocrity. And I can't tell who's making these trades. This is a giant cluster F. Okay? Okay? So, I can get a better price, I think. Okay? So that's a lot of information. Okay? And you could probably, how far out do we want to go? Okay. 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 So I removed those pivot points for Sean and Adil, who apparently don't understand pivot points, which is fine. We can get to that to some other time. Okay, so the only thing we hear is price action on top of fair market value. So it's just slightly bullish, but I think a dip and then a next up would be better for me if I was going to be buying a Cad-yen. Okay. Is that better? Sean, Adil? The heck was that? Hopefully it wasn't a spider leg. Okay, what would you like me to cover next? Stock market's opening in about 25 minutes. Beast. Okay, I can do Beast. Yeah. Ay. So Adil and Sean, you just popped in to heckle. That's it? That's all you got? All right. Alrighty then. So what do we have here? Okay. Let's see. How do you trade pound yen? These are monthly pivot points. This said, delete, at the beginning of November, buy, right? The beginning of December, buy. The beginning of January, buy. And now it says, if you can catch a dip, you should buy it for February. Okay? So what do you think? Are you capable of trading pound yen? Okay? If it drops down toward 141, are you going to buy it? We're 100 pips out of position. Hey, you guys, what do you think? See, now you're going to say, no, Wayne, you need to show me a 15-minute chart and tell me what to do today. Well, I just did. If it drops down here and you're a bull, that's a buy zone, so you should probably consider buying it. No, Wayne, what am I going to do today? I don't know. What are you going to do today? Okay? I have very simple rules of engagement. I buy low and I'll sell high. Does that look like buying low? Victor, this is market open the best time to buy it? Market opens are the best time to buy and sell anything. Okay. So if you were going to be a bear here, there's a couple of things. One, yes, you're at a high price. Okay, so yes, you could, but the second part is, it's an uptrend, bro. Why the heck would you sell it? What's wrong with you? Right. Being facetious, but I'm making a point. Like, what the hell is wrong with you? You're selling it in an uptrend. What, are you deranged? Deluded? Right? Are you depressed? Why'd you sell the pound yen? I'm just having a real bad day. Right? Right? Yes, thank you, Wolfie. So, I would rather be in a situation like this. Now, I'm buying low. Okay. At a role reversal near a psych level in an uptrend. Okay. How nice is that? Vernell says, why not sell it? One, it's an uptrend, so you're selling uptrends. So you can do whatever you want. I'm a trend trader, so I prefer to buy uptrends. I don't prefer to sell uptrends. But you can do whatever you want. I'm not saying you won't make money. You understand that? I'm not telling you what you can and cannot do. You can do this, and if you're good, you'll probably make some money. Yeah, you will make money. I'm not saying you won't. In my book, what I say is you're accepting half the reward for twice the risk. So yeah, you made 50 pips or 100 pips. Like, yeah, there's a 100 pip potential here. Okay, so you make 100 pips on that. Sweet. That's chump change for pound yen. Okay? So yeah, you can sell it. That's great. I actually need you to sell it. Please sell it. So I can buy it low. Okay? And then I'll make 300 pips. So I'm just picking and choosing. Okay, Vernell? But you totally could. Right? You totally could. You could drop in here and you're at resistance. That's cool. Sweet. Sweet. Do what you got to do. Okay? That's what you're thinking. I hope you do it. And this is what I'm thinking. I'm going to buy it there. Right? So that's the interesting thing about trading properly is bulls will do what bulls do. Bears will do what bears do. Amateurs try to do both, and they very rarely succeed. Okay? So, Vernal, if you're a bear, yeah, do it. Except what I'm trying to do as a coach now, especially to amateur traders, is you look at this and you say, I want to sell it. And I'm like, okay, great. Are you at resistance? Yeah, I'm at resistance. Okay, great. And you're going to say it's a triple top. And I say, okay, that's really great. But this is an uptrend. And you're like, that's not much of an uptrend. Okay. And I'm like, it's been up since March. Okay, I wish I can't quite get what I want to do. Maybe if I do this. Okay. We'll just use this. Okay, so since May, let's measure since May's low. Okay. And I'm measuring left to right. I'm not the one making the slope. Okay, that's the M. Okay. So, okay. So right now, when you add all this up, y equals mx plus b, one rule of engagement I might have for myself, and by the way, that's personal, is that if m is greater than 0, I'm a bull. And m is less than 0, I'm a bear. I could have that as a rule of engagement. And therefore, I'm deciding, just like you, should I buy it? Should I sell it? Should I buy it? Should I sell it? Should I buy it? Should I sell it? Then I look at it. M is greater than 0. I'm a buyer. And therefore, even though we're at resistance, and by the way, it's funny because we're talking about this, I'm going to instead buy it at the daily 21. So you can sell it, and I'm going to buy it. And we'll both make money. Okay? What is y equals mx plus b? Okay? Y equals m, right? The slope, the intercept, and the x and y axis. It's calculus. It's statistical analysis, right? So we're looking, what we're measuring here is this middle line. Okay? So another way of looking at it is m is greater than 0, buy it. But you're like, well, what is m? M looks at, for every unit this way, how much does it rise or fall? So we call that rise over run. So it's looking at this point versus this point versus this point, this point versus this point, this point versus this point, right? So the process of calculating all this is statistical analysis. Okay, it's statistics. And what you do is, first of all, you add all these up and divide by the number of data points in your data set. So let's just say you have all these prices, and you add them all up and divide it by the n, right? The n, the number. And you get an average, or what we call a mean. Okay? So you get the average price, the average price, the average price, the average price, average price, average price. So that is the mean. Okay, not the slope, the mean. The next thing that you want to do is, how much does the mean change period over period? As new time goes by, in this case, as new prices are issued every day, we'll say, well, what's the change in the average? Okay, how much, right? So like you can see here, the change from this period to this period, we'll call that one period, right? Let's call that a month or something, whatever the period is. You can see that it is now higher. It rose this much over this period. Okay? So that's what M is. M is equal to the rise over the run of the mean, which is therefore slope, which, right? And then you can say slope is equal to trend. And if the slope is positive, I'm a bull. If the slope is negative, I'm a bear. Okay? These other numbers, is what you're looking at is when price is away from the mean, how far does it go before it reverts back to the mean? And we call that a standard deviation, because when it goes away from the mean, it deviates from the average. And right, so you have a deviation above or deviations below, and it's looking at, well, what's the standard deviation? How far does it typically deviate before it reverts? Okay, so a little bit of math. Okay, so I'll look at it, say, yeah, you could sell this. You're a bear. You're at resistance. You might like this as a top. That's cool. You might like this as a top. That's great. That's great. Yeah. But I don't. I'm going to pass. Doesn't mean you can't do it. Doesn't mean you won't be profitable. Doesn't mean it's a bad idea. One of the main differences is I'm much more long run. Okay, and you might be short run. You're thinking, you might not even be thinking today. You might be thinking in the next hour or two. And I'm thinking by the end of the year. So we're both right. Okay? Wowzer. Wowzer. That was a lot, huh? Well, how about this? Would you do me the courtesy of clicking the little thumbs up button, the little likey thing? Thank you for being here today. Thank you for being part of the Forex.Today YouTube, Twitch, and Facebook community. If you are new to this, please subscribe. If you would like a deeper dive into technical or fundamental analysis, there are training courses at fxbootcamp.com. If you need a trustworthy broker as an execution partner to your trading business, please consider tradersway.com. If you sign up for a demo account, you're simply giving them an opportunity to earn your respect. And I will see you tomorrow. I'll see you the next day. I'll see you the next day. And then I'll see you the next day. So, once again, peace on earth. May the pips be with you. May your profits be above average. And thanks again for the hard work you put into this. You're going to make it. You can do this. This is yours. You got this. Cheers. Ciao.